What's going on, traders? Hope everybody's having a great weekend. Thank you so much for joining me on this week's video. Really appreciate the support. Going to be doing some analysis on the S&P 500 SPY as well as QQQ, the tech sector. Going to be breaking down the weekly charts, the daily charts, and some hourly charts for us. Looking over some other data points as well that we like to help expand our knowledge of the market, what's going on under the hood. Using all these things together to help formulate a game plan for the week based on price action, no bias, and we will implement it to the best of our ability. We will, of course, also go over this week's earnings. We've got tons of earnings this week. We are in full swing for earnings season, and we have a action-packed week ahead of us with the economic calendar as well. So we will get into that right away. Before we do that, reminder that this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. So let's get into the Market Watch calendar here. What do we have in store for us? I think everybody knows what's going on this week. We've got the big one on Wednesday, but let's see what we've got here. Monday, the 29th, really nothing on the docket for us. Tuesday, April 30th, consumer confidence at 10 o'clock. I'll pay attention to that a little bit, but we're just really getting warmed up here for Wednesday, May 1st. What do we have? ISM manufacturing, 10 o'clock, but 2 o'clock, there we go. We have FOMC rate decision and Fed Chair Powell, as always, bringing in cocktails and hors d'oeuvres at the press conference, 2:30. We will see what Powell has to say if he starts to change his tune with inflation proving to be stickier than they believed. So that definitely will be interesting. Thursday, May 2nd, we have initial jobless claims at 8:30. And then Friday, we have non-farm payroll coming out, and that's going to be huge and very important to pay attention to, and that's at 8:30 as well. So big week ahead for the markets, as well as some key earnings that we want to pay attention to. So let's look at those for this week. We have some of the lower tier tech sprinkled in before the big ones come out on Thursday and Tuesday after the close. Monday, we have PayPal before the bell, McDonald's, Coca-Cola, but everybody really is going to be watching Amazon after the close on Tuesday, AMD as well, and SMCI, everybody's favorite new meme stock, I guess. People will be watching that as well. We have Starbucks too, Pfizer, Pfizer's on Wednesday. I was going to say Pinterest, another kind of lower tier tech there. QCOM on Wednesday after the close. We'll be paying attention to that to see the health there of that company. Carvana on Wednesday, and then Thursday after the close, everybody will be watching Apple. So big earnings week ahead. A couple of names that are definite potential market movers with AMD, Amazon, and Apple. So let's pay attention to those numbers and how the markets react to them overall. All right, let's get into some of the charts here, and just let's look at the weekly here. We're going to start off and just take a look at it from the price action perspective. Really, what do we get? Nice push here off of that weekly 20. We were looking at that last week on the futures on ES, noting this position on the weekly chart, and we did get that nice buy reaction, but overall we printed an inside week here on the daily chart, right? We traded within last week's range overall. So we did not get any candles that expanded through this week, and I think that would be an encouraging sign overall for the bulls, because we did not make a new weekly lower low, right? We stayed within this range. However, what's really going on here from the price action perspective? Now, we have been talking about this prior balance zone, right? This was where we were distributing price here as we just ran sideways. Then finally, we got the break of structure. This balance distribution broke, and now what's going to happen, right? We've kind of been anticipating this retest of the prior balance structure, right? And that's why after we after this bounce, I initiated some long trades. I actually missed my real entry that I wanted, but was able to get in a little bit later, and now we're looking for this push up. Now, how high can it go? That's everybody's question, and will it break over? Well, I guess we're just going to have to find out. So I'm actually looking at potentially getting out of my long trade pretty soon here. I am swinging some calls, and of course we do have FOMC and all those earnings reports coming out as well, but I am still looking for price to drift up just a little bit higher, and really the breakdown of the structure, it's more of a zone. Of course, I don't really go with just straight support and resistance, but you can say the start of it might be down around the 510 area, and maybe up until about 513, right? I'm looking at the weekly low of April 1st here, and we have all this kind of stuff already marked out, but I always like to start with a fresh clean chart, so we can just look at the price overall here. So we're coming back up here. You can see the structure, right? We're coming back up, retest in theory. What if you're bearish, what we're looking for is a roll from there, right? And this is really going to be the marker. If bulls are able to get back within this structure, okay, then we can start to sing a little bit more of a neutral tone overall, in the market. But as it stands, for me, right now, we are still bearish. This is just the potential of really putting in a weekly, lower, excuse me, lower high. Right, because here's our swing, where's my thing here? Here's our swing high, right? And then we had a low, right? And now in the trend sequence, we'll look for that weekly lower high to be put in. And then, technically, if all goes according to plan, we should see a weekly lower low next. But if they start to get over, we start seeing some daily closes back within the prior balance consolidation here, well, then we can start to sing another story for the bulls. And this is just on the weekly time frame. On the daily, which we're going to get into here in a moment, I think shows a little bit more of a bullish case. But we just have to keep these larger time frames in our perspective, because I'm sure the bulls right now are saying everything is all good, everything is rosy, but really you can make both cases. We also can't deny the fact that we are in a strong uptrend overall, right? So you could also say, you can make the argument, that we've got our swing low here, right? We've got our high, we've got our low, and what is this? Maybe just a weekly higher low being put in, right? And then from here, this is just the springboard that drives us off to new all-time highs. However, I'm not a fan. This is all just guessing. It could happen, but as I mentioned before, we let price action be the guide, right? So I will start to change my tune personally if we start to get back inside of here. Okay, then we can start talking about potentially coming up into halfway point into the equilibrium, and then coming up into potentially the equal highs, and then we can go from there. But until that happens, I have to remain a bit bearish overall in considering the trend sequence. So you really could look at it both ways, to be totally fair. And certainly the daily, as I mentioned, has some more glimmers of hope, I should say, than the weekly does. So we'll take a look at that here in a moment. But as it stands, we're in a bearish neutral stance, in my opinion, here on the weekly. I mean, it did kind of close over the weekly 9 again. Kind of uncommittal close over for me. So this could easily be slapped down, especially with the volatility potentially in store with FOMC and Powell and earnings. So, all right, let's get into the daily chart here, and we do have some other views that we can take a look at that we already had created from this perspective. Let's pull out this one just really quickly, and you can start to see here some of these levels that I'm taking a look at. See really here, 510 to 4. You can really call this 513, right? If we start getting over this low here of the first, we can start singing a new song and dance. And then look for this halfway point as I mentioned. If we start really seeing some daily closes and we get through this week above 513, 512.50, I think then it would be likely that price would start to drift up to 515, maybe that 517 area for the next long target. But as I mentioned, for me, we're still slightly bearish until proven otherwise. Let's get down into the weekly though, into the daily, and start breaking it down from that perspective, and we can see a little bit more granular. We've had a wild week. We had Meta earnings, Google earnings, Microsoft earnings last week, and you can really see that reflected in the daily price action, right? Up, down, back up again. So it's just been gaps galore here over this last week. Slightly tricky price action to navigate. So now we were talking about, and let me go back just to the price action perspective. Now we were talking also about these overbought conditions, right? Last week we were looking at this and saying, okay, we're definitely pretty oversold. We're pretty oversold here. We want to see this start to turn green and start to push up. That's exactly what we got here on our Hello Momo, and I love to see how that played out, really giving us that other line of confluence that maybe a short-term potential bottom was in the market. Here on the daily, we can see a little bit more clearly about the balance range that I was mentioning earlier. I have that totally, I don't have the top correct there, sorry, but we can see it a bit better now here as well, and looking for price to come up, trade into here, and then roll over if you're bearish, right? And there are a couple of things here. So I don't want to be completely, doom and gloom. And when I talk about being bearish, I'm not talking about SPY going to 400 or 360, the COVID lows, anything like that. We're just talking about a pullback. Overall, I think still the market is obviously in a bullish time frame or bullish mode on the even longer time frames, i.e. the monthly, things like that. So, but we have been also, and let me just jump back to the weekly really quick. We were also talking about this slight this overbought condition. We were looking at that short to finally come in. We didn't know how long it was going to take. I still think also from this weekly view, like it wouldn't be crazy to me to see this come into the zero line. Where are we here? We're still at negative. We're at 4 right now. I could still see this coming in on the weekly to the 0, and then from there that being an area where we might want to look to actually go long into for even longer dated kind of longs into the end of the year, because I do think that we will end up rallying into this election cycle here, right? I don't really think that they want the market down ahead of the elections, but who knows? Will that price lead us? All right, let's get back to the daily here really quickly. There's another way I actually wanted to bring up this view. Let me find it. That is not what I wanted. Okay, this is what I wanted. All right. So we're looking at here line chart on the daily, and I wanted to throw out a couple of levels here on the daily that I'm going to be paying attention to. Where we had this impulse move up, right? And then what do we have? We made a higher high, came back in. Now we have a a higher low being put in, right? So we've got our swing low here, right? Here, our higher high. And now we've kind of made a new higher high. Okay? That's all well and good. So for this to actually continue, and you can see here, we're going to have this marked off, right, as kind of the back test of that balance, right? What we need here for this bull move to continue into this area, it's going to be very crucial that we hold this previous swing high, right? So I'm going to definitely be watching whether or not we're trading over 505.50. I think will be a good area. If we start to lose 505.50, that's going to be the first warning sign, in my opinion, for the bulls. The other key area is going to be the prior, right, swing low in this trend sequence. So that's going to be around 503, 503.50. I'm going to watch, really, it could be, let me find out exactly. There we go. All right, yeah, I mean, I think that's fine. 503, anywhere from 503.50 to 503. 503.30 here is what I'm seeing when I get a little bit more close there. So I'm going to be watching that as well. So under 505.50, warning sign for me. Under 503, 503.30, definitely that is more of a warning sign. And once, if we break over under, these prior highs, so I'm going to watch this area here under 501. Definitely worried. Under 500, that's it. It's game over. Bulls are really back from that daily perspective, in my opinion. So here are some key areas that, in my opinion, are going to be important to pay attention to. Right? If we see this come in, and then eventually we, if you are short, that first target's always going to be those equal lows, right? So pay attention to this for sure, in my opinion. We also could, just pull back into that 505 area, right? We just made a higher high, pull back into here, right? And then from there, we make our move up into the 510, which is really my next target. And then hopefully we can get up into the 512. I don't know. If we start to get over the 510, I will start to feel a little bit more nervous about that short trade that I'm talking about putting on, but I still probably will take it. I will also show you here why I'm watching this 510 area. Let's throw on another view. Okay. So here's another view that we have been watching with some more of our levels. Now, you can see here, this is the 503 area where it ended up bouncing. Okay, let's get out of the line chart. I just kind of wanted to go into the line chart here because I think it's easier to kind of see the trend sequence overall and what's happening. But let's just go back to the regular chart now. Okay, so what I'm also paying attention to is the back test of this trend line, right? So that's why I'm not sure if we're going to make it all the way into the prior consolidation, but I'm going to be watching to see, and this is around that 510. So I was looking to see that if we would back test this, and then this is the other scenario that I'm kind of, hypothesizing, is we come up a little bit higher into here, and then we break down. And now, of course, bulls can come in off this 506 and start to bounce us, but that would be a step in the right direction if you're interested in going short. And see, if we get over this 510, as I was mentioning before, that's when I will get a little bit more nervous about taking the short, is because we've recaptured this trend line. Now we have price hanging out here, and it would be more likely that would probably trade up into that 512 zone. And that's all well and good. But then if there is a rejection there, have to consider the fact that we're going to come back and retest this trend line again, which might end up holding for the bulls and just kind of be another area then where we're going to have to where the bears would have to break, and you know, you just obviously never know if that's actually going to happen or not. So let's get down a little bit more granular here. I'm gonna probably keep these levels up, but let's go into an hourly chart, see what we can take away here. We've kind of been over some of those day trading levels. Let's go back. No, 5 days is fine. From the daily chart perspective, but we can also break it down here overall, what I am watching. So the bulls, they need to hold these Wednesday highs, right? 506, 506.50. This is really where we need to hold. So if we start to get under here from the day trading perspective, really start to break these lows, I guess, what is this? 505, 69. I'm gonna call it POC. We get under 505. For me, then it would be pretty likely that we would trade back into the 503 area. We just talked about that earlier on the daily. You can see that this was kind of a sloppy inverted head and shoulders, but this is the next area of structure that's going to need to hold so that we can continue this uptrend, right? If we start seeing price come underneath that 503 area, 504, right, then we start looking, you know, then we start looking like something like this, and the trend starts to change, right? We're no longer having the flow of the market in this direction, right? So that's when things are going to really start to change here. They certainly could bring it down into 502 here, which is, what is this? Is this Monday's high? I think it's either Monday or Tuesday. This 502 as well. If this gives up, again, we're probably going to come back down to 500. So for the bulls, you know, we got to be careful here because it could potentially be, and let me get to something. Let's go here. Okay, so in this area, we were already talking about this kind of being the weekly, the potential for that weekly lower high to be put in. So right, you know, in this area, and even down in here, it's kind of a little bit of a no man's land, right? Because it's either we're going to need price to start to accept back below Friday's lows, back below the Thursday session low. Okay, we start seeing that. Then we have a little bit more confidence in the bear trade overall from the intraday perspective. But if we're just hanging out, you know, in here, it's kind of like it can be a chop zone, right? Because it's uncommittal. We haven't had price either get up over that the lower high on the weekly time frame, and if we do, as I was mentioning, if we get over this 513 area, then it's game over. I would assume that would probably start to squeeze some bears out of the water. We could see an easy, quick move to 515, you know, over 512, 50, 513. I don't think it would be hard to get back up there, back up into this high right here. Now, whether or not that holds will be another question. You know, we've seen tons of fake outs in the market all the time, and that can happen on a daily chart as well. So, you know, we'll see how it plays out. But I just kind of wanted to err a side of caution that in this area, it could just be a little bit of no man's land, chop zone. Certainly, it's a potential, you know, you can probably make scalps and trade in this, but I think it's just important to realize the context of where we are on the bigger picture. Also, considering the fact that we have FOMC, market also might be more hesitant coming into Amazon, Apple earnings. So a lot of reasons why we just want to be a little bit more cautious and at least prepared mentally for potential trappy, tricky, rangy price action where we see a lot of false moves in both directions, a two-way tape. Let's just have that in the back of our mind as well with the context of the price action on the chart in these bigger picture levels that either need to get broken and accepted over or under, right? So Let's pay attention there. We're gonna watch Friday's lows, of course, for the bulls to continue. We need over. I mean, it's pretty elementary. We need over Friday's highs, over 510. Really opens that door to get us back over. That's also going to get us over the trend line. Remember, which we were just talking about earlier. It will get us over that trend line and then lead us to the back test of that balance. I'm more looking at that short side if we start trading under 505.50, 505, but really under 503. I mean, certainly, yeah, there's a trade there, right? That's a $2 drop. Yes, you could take advantage of that, under 505.50 down to 503, 25 area. Sure, you can make a money on a trade like that, but we are looking at, what would an hourly trend reversal be, right? What would a 30-minute? So we're looking for slightly bigger swings than a trade that we might take on a 15-minute chart or something like that. So let's also keep that context in mind as we look at at these time frames here. We're not looking at the 3-minute chart, right? All right. I think that's pretty much everything I wanted to go over as far as SPY is concerned. I think the last thing I would say is that we really start getting under these Monday highs here around 501, 500. It would be pretty likely that we would come back and test these equal lows at the value area low right around that 197. We'll call this 198 here, basically, is what it is here. I would not be surprised to see us trade down into that area once again. But personally, since I'm still long, I'd like to see a little bit more upside first, but we'll take it as it comes. I mean, it could still, like I said, pull back to this 506 area and just totally be a 30-minute or an hourly higher low, even to 503. It can just pull back there and still bounce and totally be fine. I think that breaking these can be quote unquote warning signs, right? Okay, so let's move right along. Let's get into, I think that's all the real important levels I really was wanting to pay attention to here. Yeah, I think that's fine. We could... I'm going to actually just post that privately. All right. Let's go into the Qs. And we got a lot of the same song and dance here for the markets. So same thing here on the weekly chart. Now we were noticing last week when we were looking at the NAS on NQ that we were actually below the 20, and we were noting that ES was right on the 20. So we were also talking about that divergence as far as the strength in the markets. QQQ did play catch up, recaptured, but we were also looking at SPY just a few minutes ago on the weekly. And we noticed that it actually did close. I mean, I was mentioning it was an uncommittal close over the weekly 9, but we did get a close over the weekly 9. Now, during this bounce, we still see the same divergence happening in the market here with QQQ not closing over the weekly 9, whereas SPY did. We have the same situation here going on as far as the price action is concerned. We have our prior balance zone right here is what we are watching for price to come up and retest. Now SPY is getting pretty close to it, and I'm noticing again SPY is leading the way right now. So I think that if we see SPY come up and retest the prior balance, it may do it first, and in addition to that, QQQ won't be there, so SPY actually might go a little bit into it. I'm suspecting, because QQQ is going to have to play catch up, and it will come up, and so SPY will actually, you'll see the price probably come into balance here and scare all the bears, but it's just because QQQ hasn't made it all the way yet. I think when QQQ makes it, that will actually be the time that we're really getting the signal that the short, will be on. So I'm going to pay attention to that divergence here. What are the levels that I'm going to be paying attention to is the back test of the prior balance distribution. It will be, let's pull it up here where I always forget which ones. Okay, here we go. Boom. Okay, so here is our zone my zone that I am watching. I am paying attention to these these wicks here. I don't have it marked off up that high, but I will note that these weekly highs came up to 439. About, what is that? 37, about $2 or $3 more over. This one came up a little bit higher into the 440s. But for me, I'm looking for price to trade up into 333, 335, over 330, over 337.95. I'm going to call it 338. Under that, I'm nervous about being bearish. That would really show a market structure, that would show a shift here, a change in the character from the weekly perspective. We start getting over that 438, 440, okay, I'll start to change my song and dance. But until that happens, I am open to the possibility it could even do this, this, and then burp, and then we fade out from there, right? And it just kind of rounding out, right? And really, what are we doing here, right? We're just making a big weekly H. Is this 100%? No, nothing is. But that will be the thesis for now. And this is just a why we've been over this Wyckoff, and maybe I'll post one of my videos that I did on it before that I posted. This is just Wyckoff playing out, right? We have our we have our distribution, mark down, retrace, and then we set up for the markdown too. Where could we potentially go? Well, I think a lot of people were talking about that 480 area on SPY. I think that that's fair. We'll also be paying attention, or I'll be paying attention. Let me go back here. I was looking at these prior all-time highs as well, so we'll also look for about 400 potentially, maybe in that area. 399, 400, 403, maybe 408. So a little bit of a zone there. I think that would be the reasonable first target for shorts if this was to play out. So I would look anywhere in this zone here. But if they start to get underneath, and we're going to look at the January 1st, actually that yearly open at, what is that weekly low? 395, under 395, and I am targeting 387.50 area. I think we could come into the summer highs. That was my initial target, really, for this whole move. That was retest these summer highs, and then from there we bounce. But this is also totally possible as well. The summer highs, I think, would give us that monthly higher low, and then we can rock it up into maybe into 500 into the end of the year. But either one I'll take. So I think that this is reasonable, right? Either one of these two targets for the downside, if this trade is going to play out like I think it will, but maybe it won't. So you've got the top there of this prior kind of balance zone, right? And we went over that, and that's already where we kind of bounced, right? So we would really be looking to break under that. So I think under 413, under that previous weekly swing low, I don't think it would be out of the question to see 400. So, and as I mentioned, we get back over 440, then we can start to look at higher prices. One thing I will point out here, and I don't usually pull out these custom indicators too much, but I'll do it today. I do have this firing bearish here on the weeklies. This is not what you'd like to see, and according to this, again, I don't make a trade just based off of an indicator alone, but I'll throw this out there for y'all. Weekly here on Qs is shot bearish. It's bearish unless first stop 444.90, bearish unless it gets over that. If it gets over that, I would feel nervous, but really bearish, it's got it right at the swing high until over 449. So there you've got it. It could even break up and above and still technically reject. Would I be able to, if I'm shorting in here, am I going to take that heat? No, probably not. But that's something to consider here, I think. And this is kind of, you've got the tail of the two time frames here, and you can really see it. The daily, here's something encouraging for the bulls. Daily's flip bullish, just from this view. So I think that that's interesting. This one's a little bit faster acting, even though we are looking at these longer time frames. So, you know, we got that gap though. I mean, you know, it's with a lot of, you know, there's a volume pocket there that really could be easy to chew through. Just for giggles, I want to see where this one is. All right, this one's still bearish. This one says stay short unless we're over 443.50. So, just something interesting to look at there. All right, let's break down the Qs a little bit more here. Let's get on the hourly chart and take a look at some levels that I will be paying attention to. Okay, for me, ideally, I'd be the most bullish if we're hanging out over basically this 431.30, excuse me, 431.50. We're hanging out over here. Okay, I think we can have that potential shot to about 433.40, 50 area. We get over that, looking for price to come up into 440, 433.80, over that 436 and some change would be my next target to the upside. But if we start seeing price back under Wednesday's highs here around 429.50, start to sing a different song and look for trades to come back down to 427.45, the low of Friday. But if we get under that, easy target there into 425 half, or excuse me, 425 quarter there as well. Just anywhere in that zone. Simple breakdown into a previous into the POC here. I could see that being a very easy target. Also, nice confluence with retesting this this shift in the market here from the, I believe this was from Meta and from Microsoft and Google, come back and retest this prior breakout. That would make sense to me. It's also the lows here. So under 427.45, or you could even have just this swing low, whatever this low is, was this here, 420. So under 426.90, I think you can get a pretty easy move into as close to 425 as possible, right down in this area. Maybe you get 424.25. Or 424, excuse me, 85 right here. Under that, watch for this next shift, 422. Under that, oh boy, 421, 421.75 here would be the next target. So there you've got it. That's what I'll be looking at for the Qs and the day trading levels. I feel like there was one other thing I wanted to go over for the Qs. Just go back. Do we have another? You can see here that we are also doing a very similar thing, retesting this big trend line as well. This is also what I wanted to point out. So we'll see. We shall see. Can they get over and start to trade up into it? That is the $100 million question for the Bulls and the Bears. All right. Perfect. I think that's everything. All right. Let's go into the dollar here, because we definitely have some interesting things going on in the dollar. We had the market rallying. This was kind of a conundrum for me. I had the market rallying on Friday, but look what the dollar was doing. I was thinking that for that rally that we were seeing on Friday, that we would be breaking below this 105.50. My thought was, my new thesis, I'm surprised at this. My new thesis was that we would actually No, I remember I was talking about this 105.50 last week, but I was thinking as we were coming down that we would actually break, and we still might do this. I mean, this would be quite a move, 80 cents, but I think that we do end up retesting those prior balances, and this will bring the dollar into 105. 105, it would probably be where I would think about maybe then getting into the put position and swinging, a month or two outputs. If I see the dollar coming into 105 and I see the market hitting those bigger time frame levels, two reasons of confluence there. And I'm sure I could find another at the time. I've got my three reasons. Okay, then I'm gonna go ahead and hit that trade. So let's pay attention to that. But I do think that it was interesting. The dollar just really showing the strength there, not making too much sense. You would have thought that this would have been down. Just basically came into the daily 20, popped right out. You can still make a case for just a giant flag really taking place here, right? And if this starts to break out over the 106.40, we should be looking at 106.87 and maybe that 107 level for the dollar. So it's really, all this is just bullish consolidation until we actually see that potential move right into this area, or we break under, come into 105. This will be the big test. 105 test might be the springboard that we see the market then, and then it really makes its big move, right? And then we see that finally that weekly lower low. So let's see what happens there. Still got to be bullish on the dollar as long as it holds over 105. All right, keeping it moving all along. We're going to get into TNX. I really hate how they changed the symbol here. I don't know why they did that. Kind of same story here on TNX. I just don't see. What does this look like? It looks like it's just a flag. We're just kind of up here, high and tight, consolidating. Right. I don't see that this is out of the question. To see TNX getting back up into 48. Over 48.25, and I think we're going to see 5% again. So it's held. We could still see more back tests here. Whoops. We could see more back tests here. That's another scenario we can watch. I'm going to actually extend these a little bit. So, bullish here until proven otherwise. Same situation. Let's see. I guess really we have to stay bullish as long as it stays over 45. So, not good for the market, not good for Fed. All these things are really just saying higher for longer. Which is what I think the economy needs, what the market needs, but that's neither here nor there. Okay. Let's get into some of our other market internals here. Let's look at the VIX, what's going on in the volatility world, and put-call ratio. Put-call ratio is even, flat, nothing there. Okay, VIX, I think this is a good sign. We are still holding 15. Okay, so we had basically for the bears needed to hold 15, 75, 15. This area, we get down a little bit more. It's very possible that we could see a drop in volatility once again. But, we've seen these pushes. We're not going back far enough here. I'm going to show you on the VVIX, but we can show you on this as well. Okay. What we've seen, though, a lot of times, and here's a couple of good examples of it right here. What did we see? We saw a huge thrust in volatility, right? And then it just peeled off. Then what did we see again? Boom, huge thrust, right? Peeled off. So this huge thrust, peeled off, huge thrust, peeled off, huge thrust, peeled off, okay? We've seen it again and again. So I just want to be cognizant of the fact that we can see these huge pushes, and then it can cool down, and then out of nowhere, it just comes back once again. So we're not technically out of the woods. We're still in the elevated volatility environment right now. Let's see if this cools off. We're going to look at the VIX futures here, which are still showing us some interesting information. But I think that this kind of backdrop of looking back, just seeing a little bit more how you can get these first initial pushes, then a cool off, and then another initial push. This whole area here just kind of says to me, whoops. This whole area here, I'm trying to, there we go, is telling me that once we start to see these initial thrusts, a lot of times, it's not over. It kind of happens in an oscillation, in a wave. So we've seen that first thrust now here for this season. That's very possible, just setting us up, kind of opening the door, should I say, what's an analogy? It's kind of like a crack maybe in a volcano. You know, you get that first initial blast that kind of breaks the crust, and then you get sequential blast after that in different amounts of time. I think that that's a fair and good analogy for it. So I think that this first thrust here could be that first crack in the crust, kind of leading us to potential more volatility continuing in the markets overall. So let's just have that backdrop in our minds for what's going on right now in the market. But I do think that it is constructive, at least, that we're not below 15 quite yet, convincingly, but at least we're under 16, under that 1575. So I think that that's a step in the right direction, at least. All right, so let's move along here. Let's take a look at, we'll get away from VIX. Let's look at how many stocks are trading over their 50 period moving average and 200. The 200 here, we'll go over that first. I still think there's a potential here that we can come into that back test, that 75 area. We're still waiting on the SPX 500, the 50R, how many stocks are trading over the 50 period moving average to move up into the 50% range. As long as we're still under the 50%, we are still technically in a potential danger zone. Hold on one second. Okay, sorry about that. So we're looking for that retest, right? I still think it looks like we could come up and retest the 50% marker here. And then what we are looking for, or if you're bearish at least, or what the concern is, I mean, I'm neither bearish or bullish, but what the concern is that we could do this, right? And I do think that this is going to come up to that 50% ratio. What's going to happen there, I don't know, but that would be my theory. I think that this is obviously the 200 period moving average, so this one's going to be a bit slower to react. There is a chance that maybe we can get up into that 75, and then from there potentially see the move down. So still watching here. The amount of stocks trading under the 50% line. We're at, what are we at here? 44% trading over the 50%. So for really true strong market breadth, we want to see this over 50 again. New highs versus new lows. Let's get into that really quickly. We do have a slight push here over the zero line. That's constructive. That's great. I think that this is good overall, but we're not really convincing, right? 58. That's not really telling me, oh, okay, we're all free and clear. Look what's happened multiple times before when we've gotten over this, right? We got over here, and then what happened here? We pulled back. In this case, we did break up. This case, we dropped pretty, right? We got over. This place, we dropped pretty strong. Here, this kind of sparked us off for a mild drop. This one, we were holding over. This was a big drop. This was kind of a fake. So this can get over, but not hold. Again, these kind of fake outs. So although, yes, great, good, we are above for now, but will it hold? I don't know. It's not really convincing. If this was up, you know, maybe 100, 200, okay, then I'd say, all right, that's a little bit more convincing to me, that we potentially have a little bit more underlying strength, you know, under the hood. But as it stands, it's not committed. It's, you know, kind of a non-committal push over the zero line for me overall. All right, let's keep it moving along here. I'm just going to take a look at some of the bonds here. You know, I really need, you know, if you want to remain bullish, we need TLT back over basically 88.50. Unless this can get back over 88.50, it is not looking good for TLT. This could just end up rejecting here, pushing us down lower. And of course, this will bring TNX higher as it stands to a TNX looking like a bull flag, looking like it wants to go higher. This back testing this previous trend line here, well, it just looks like this is just going to end up going like this. So not a good look there overall. You can see here that this is the 3 and 7 year just selling lower lows, lower highs, and this, the ratio to themselves moving up. That's not really what you want to see for the flight to safety type of trade right now. Another thing I will look at here. Now when we looked at the junk bonds here, the HYG last time, we were noting the divergence, right? We saw that SPY made a lower low, and we noticed that this actually had made a higher low. So we were noting that divergence there. But what are we getting this time? Okay, we had the market. Let me zoom in because I know it's a little small. We had the market make a higher high, but HYG did not make a higher high. Okay, a little bearish divergence there. We're going to note that and put it in our back pocket. Okay. Let me move right along here. All right. What else? I think that's pretty much everything. Oh, VIX futures. Let's look at that really quickly. Okay, we're down in here in the 80 zone. I think on the VVIX, that's good, but we can still obviously see those thrusts once again out of nowhere. We've been down here, push back up, push back up. I think that overall this is a good sign, having VVIX back down in the 80s. We need to stay down here, right? We want to see if you want, you know, the bullish case, you want to see this hang out here for a longer amount of time. This is not enough time for me yet to be totally convinced that we are free and clear. Give me, you know, another week or two hanging out down here, and I'll feel a little bit more comfortable on the VVIX. We still have the monthly versus the 9-day elevated above the 0, and we still have VIX futures in contango here above the 0 line. So, you know, they're still pricing in higher volatility in the future here. So these, both these are, I would say, another kind of bearish data points that say, all right, hold on, volatility overall in the market may not be over just quite yet. But we will take it, of course, just as another data point and to kind of formulate our thesis overall. But definitely paying attention to both these readings here. I think the VIX a little bit more, the VVIX a little bit more neutral, but the monthly versus 9-day and the VIX futures both, I'd say, are bearish still, the data points overall. All right, I think that's pretty much everything I wanted to go over for this week. Let's see what we've got. We have an action-packed week ahead of us with FOMC and big earnings from AMD and Apple, amongst others. Let's see what happens, because this really, this week, I think, into the first couple of days of May is really going to be the turning point here in the market. What we are going, then, you know, the next phase, do we get some new lows, or do the bulls come out and conquer and start seeing closes back above the prior distribution? So it's anybody's match right now. May the best, I guess, animal win. And let's be flexible with our bias. Let's let price be our guide. Of course, remember, a prepared trader is a profitable trader. So let's plan our trades, trade our plan. Thank you so much for joining me this week. Really appreciate it. If you enjoyed the video, feel free to subscribe to the channel. Turn on that notifications. We're almost there. We're almost at 1,000. Can we get 1,000 by May 15th? That would be awesome. I would love to see it. I mentioned last video that maybe for the I haven't thought about it yet. I'm gonna decide. It's either gonna be 5 or 10 people. Maybe 10 people I'll give away a smaller gift, and for 5 people I'll give a bigger one away. I haven't really decided, but we're not quite almost, I think last I checked, we're at 965 people. So when we get a little bit closer to 1,000, I will give this a little bit more thought. But yeah, we're almost there. So thank you so much for supporting me. Really appreciate that. Hope everybody has a great week. Let's remember to stay nimble, especially with FOMC this week. And let's be ready to be the best traders that we can possibly be. Follow our plans. All right, guys. Have a great rest of the weekend. Take care. I will see you on the internet and next week. Bye-bye.